Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 11th of March 2020. And yesterday we published a video entitled Equities and Dollar Rise, Gold and Silver Prices Fall. And the day before, global equities fall while gold and silver prices seesaw. We've placed links to both of these in the description box below. Now, just over a week ago, we predicted that the Fed was likely to spring on us a surprise interest rate cut of up to 0.5%. Though, to be fair, we thought it would be a 0.25% cut and then another quarter repeated on the 18th of March when the FOMC next meets. However, the following day after the video was published, the Fed announced a surprise cut, but it was a full 0.5%. And since then, markets are now factoring in another cut on the 18th of March, which certainly suggests that the world's economy, as far as the Fed's outlook is concerned, is in a far worse state than they were formally prepared to admit. Now, the day before this cut occurred, we stated that the G7 had bandied together and agreed an interest rate cut across the major Western economies. In fact, a pact was formed. And we predicted that the Bank of England would cut rates last Thursday. Now, they did not, so we were wrong. So we assumed they would wait until the official MPC, the Monetary Policy Committee meeting, on Thursday the 26th of March, when rates would be cut by a similar amount to the Fed, this being part of the pact. 0.5%. We were wrong again, because they did that today. You see, normally the Bank of England announces rate cuts on Thursday, which is why we anticipated the rate cut last week. The markets know this, and the foreign exchange traders were prepared. In hindsight, we should have realized that it was more appropriate not for the markets to be able to predict central bank moves too clearly. Otherwise, they will then control the agenda and the market from their own trading positions. Now, we have to admit, we were privately certain that rates would be cut last week, because we know that all of the Western economies are in deep trouble, facing an imminent recession. And so we couldn't understand why they didn't cut rates, why the UK Bank of England did not cut rates, especially after we received reports from colleagues as to more or less what was actually agreed in terms of all of these institutional agreements, i.e. the aforementioned pact. Okay, so we were 6 days too early in our prediction, but we're pleased that our information was correct. Just the exact timing was slightly adrift. We suspect also that the Bank of England wanted to view the reaction to the Fed rate cut and let the foreign exchange markets adjust other currencies accordingly. Now, the immediate result of the cut of UK base rates from 0.75% to 0.25% is that sterling fell against the dollar by 0.5 cent, with there now being $1.30 to the pound. This may alter again during the course of the day and the next few days, but with markets expecting another dollar cut next week and an ECB euro cut tomorrow, we're not expecting any major change in that relationship. The 0.25% base rate is a record low for UK rates, matching the rate originally set after the 2016 Brexit referendum, which shows how seriously central banks are treating the threat to global growth. Now, in addition to this rate cut, the Bank of England has undertaken to free up billions of pounds of extra lending power to help banks support firms. You see, the vote to cut rates was unanimous, and this was further reinforced by the bank stating, quote, that it expects the UK economy activity to weaken materially over the coming months. This could lead to temporary but significant disruption that means many firms and people may not be able to pay their bills on time. Such issues are likely to be most acute for smaller businesses." Unquote. Now later today, as we're producing this video at 10 a.m. GMT, the Chancellor of the Exchequer will be announcing his budget. And we are expecting a package of measures to both help the health service and small businesses. And we shall report on this in a later video. Thinking about it, we should have really predicted the rate cut happening today, because clearly the central bank and the government are now at last appearing to work in unison, and therefore it makes sense for the bank to reduce rates this morning and then the government to announce a series of fiscal measures to help the economy. Now, interestingly though, the Bank of England did not announce any new quantitative easing bond purchases, but did lower what is known as its counter-cyclical capital buffer for banks to 0 and launch a new scheme to support lending to small businesses. Both measures designed really to keep borrowing flowing and making it easier and cheaper for the banks to do so. It is obviously keeping any QE plans on hold until it sees the effect that these changes may have on the UK economy. Now, we shall report this evening the effect that the budget is likely to have on businesses and the UK in general. And we no doubt see this as a sort of template for other nations possibly to follow. We say this because the Fed has been calling on the US government for some time now to use its fiscal policy to help the nation, as its own options on monetary policy are somewhat limited. And the lower they reduce rates, the more limited their options become. Gold is up some £8 today and silver up just a penny. In dollar terms, gold is standing at $1,662 and silver at $16.98, providing a gold to silver ratio of 97.9 to 1. Now, we suspect that precious metal prices may actually recover a little further today as markets begin to appreciate the seriousness of global developments and how close we actually are to a world recession. Now, European equity markets are up this morning, not surprising after the US market's strong performance, and the Dow actually closing at 4.9% up, regaining at least half of what it had lost the day before. Now, that said, Asia Pacific markets are actually down overnight, with the Nikkei 225 leading the way down by some 2.27%. Now, over on our Richard and Greg channel, Marcus has just conducted an interview with Greg, which we will be publishing later today, on the update of the geopolitical situation. And we seriously recommend to our listeners, if you have the time, and we appreciate not everyone will have, but to listen to both channels, as they will be dealing with slightly different aspects and issues, but at the same time all having an effect on precious metal prices. Thank you for listening. If you haven't already done so, please subscribe to our channel. And if you haven't already done so, please subscribe to our Richard and Greg channel as well, and press the bell signs so that you're notified of our videos as and when they are published. And we've placed links to these channels in the description box below. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.